what does embracing the suck look like? I think it means loving the boredom, choosing to embrace the boredom, to see that I'm comfortable doing nothing and that not every day is going to be a home run. And some days I'm going to make $200 and it'll be annoying and I'll have to go about my day and it takes longer for my accounts to compound. But I know that that boredom is helping me stay stable. So you got to kind of lock into boring trading being a part of the growth. And then I think a big one for me, especially, and I think for a lot of traders, based on traders that I know, is allowing small losses. Respecting small losses, respecting that that's the variance of a trading system and that you have to be able to take the hits, because people who allow the big losses, that's an ego situation.
Just a quick pause before we get into this. Trading can be intense and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Hey guys, welcome back to Market Mamas. My name is Becky, the host, and I'm so glad you're here with me today because I'm really excited about today's episode. Today, we're going to talk about something that I think is really instrumental in progressing through early years of trading into the actual profitability stage where trading becomes your business. You can scale, you can adjust, you can compound, you can branch out into different types of trading where you can really sort of get through to next levels. And I am very happy, and I have to give credit where it's due because a lot of different factors played into this concept for me. But I recently watched a video by Alex Hormozi, one of his channels, and I absolutely love him and his wife Layla. They are so inspirational and such a lovely, inspiring, hardworking couple that have really built an empire. So of course I want to listen to them and like skim interesting tidbits that can help make me stronger. And the video that he did was about embracing the suck. And I loved it. It was so good and so applicable to trading. He is an entrepreneur. He works in the business of fitness as well as like acquiring and selling different businesses, just as a tiny overview of what they do. But for trading, this is extremely applicable. It's for all the traders who are like so dedicated and motivated, especially in their beginning years, but struggle at some point. It's like you want it so bad. You watch all the webinars, you get in with all of the mentors, you search YouTube videos endlessly, you play with your strategies, you talk to different people in different communities. Maybe this is your year. You have decided that you are going to finally be consistent and lock in and get those payouts that we're all seeking. But sometimes it doesn't work out, right? Sometimes we encounter resistance. Sometimes we get losses. Sometimes we can't hold the accounts for as long as we need to in order to get to the other side of those. When market conditions change, when we have had a nice uptrend and then the bottom falls out, or if it's terribly choppy and you're not as good in those markets. Sometimes when you lock into boring trading, but then it feels boring. And so you start to pull some bullshit and get yourself in situations. Does that sound familiar? Because I definitely know those experiences and have worked through them myself. But there's a period where instead of like going down those spirals, you can lock in to pushing through. And so that's what I want to talk about today is different methods and understandings and thought processes around this whole subject of locking in, even when it's not cute, even when it's not pretty, even though it's not giving you the outsized returns and all the exciting things that you wish that you could daily report on to whoever it is that you speak to. But I think if we can actually figure out and push through embracing the suck period of learning to be a trader, we can really get through to the other side and not just have it be a green week, but instead have it be the growth of a stable career in the world of trading. And I know it's not as common as we want it to be when this is our pursuit, but it can be common for us. Like we can be the ones who get there. Like I really believe that for myself and for you. I mean, you're on this podcast for a reason. And I think that it's because you really want it. I don't know why else you would show up to Market Mamas because this is where we hang out when we're pushing through all the psychological barriers that we have to get through to the other side for the long game, right? I think it's very true that ambitious and big goals is like so sexy and so desirable and so appealing. And that is what we're hunting. But the actual work and the consistency of locking into your trading system and fine-tuning it is kind of boring. It's monotonous at times. It's not as flashy day to day or even week to week. I think everyone in here wants to be a six-figure trader, as do I, as am I, manifesting it and stepping into that this year. But it's harder to commit to fully, holistically, energetically to being the trader who journals consistently every day, who wakes up on time every day, and who does their thorough hypothesis, who takes time for peace and high energy and taking care of their bodies and having healthy conversations and balance in their life, who only takes the A+ setups, who always stops at the max daily loss, who never moves their stop loss because they have determined that is their risk management for their trading system, who doesn't engage in overtrading when they don't have the time to be focused at their charts, who sits out when there's no edge and it does look like it's choppy, who can just say, I'm not trading today. I don't like the look of it. I don't like the setups that are presenting. I'm not going to trade. Those choices are not as flashy and beautiful, but that is the deep down nitty gritty of what it is to have that consistency that can finally compound. And I think part of what we have to work through during this phase, which Alex Hormozi put it so well, is building our frustration tolerance. So I don't know if you guys have heard that term, frustration tolerance, but it's really good. And basically, you have to be able to deal with frustrating situations without blowing up, without mismanaging them, without messing around and finding out. Because in this business, you have to be able to have frustrating days and not wreck yourself. You have to be able to take a small loss, be wrong on a trade, and recognize the fact that that's just a part of the variance of being a trader, and you need to walk away. And that can be really frustrating. It can be really frustrating when you get in on a really good trade opportunity and you take a small piece and then it runs for another 100 points. That can be super frustrating. But if you honored your system, you got out at what you understood to be the logical targets, and it just was this one-off day that just flew, you got to figure out how to be at peace with your peace. You have to figure out how to let that lie and be okay with the outcome that you've got, because it's a part of your system. You understand that you didn't take outsized risk. And maybe next time you'll journal this event and be able to capitalize on it more the next time. But getting FOMO and getting frustrated and chasing the tip after this monster move that you are not in, you see how there's two different ways to go with that. One is stable and consistent and believing in the long-term trajectory of your trading and respecting your rules intraday, versus getting frustrated and giving into poor decisions that can compound your issue. So having little instances of frustration, which 1,000,000% we'll have as traders, trading will be frustrating. And I think you guys probably get that. Frustration moments will happen. The stop outs that we didn't think were going to happen, the trades that we missed because someone was distracting us at the time, we couldn't get the entry, the risk was too high. By building a tolerance around those will make it so much stronger in your ability to just deal with it. Just let it go. Just let it be a part of the business that you're doing, and you don't get overly passionate about it. You don't lose your vision. You don't give in to your frustration, but rather you hold steady, which is so different, right? I think having the frustration tolerance really leads to your ability to accept one or two small losing trades and shut it down for the day, because you just can't get in sync with the market. It is sitting on cash when you don't see a great opportunity. If you don't see an A+ setup, then you don't have the right setup to put your risk on the line, which is so powerful. Also, if other people are trading and you can't get in on a sick move because your child is homesick and you're really busy and they need you and it just isn't an ideal situation for you to trade, those moments really should be okay. And if you are still fighting with those, if you're still pushing back against that FOMO or your frustration or your greed or your need to be right and battling with the market, that's when you get into a situation. So I wouldn't argue with you, but I would suggest that this is an area that we all could improve on, because I know this is an area that I can improve on. And when I think about it, it makes so much sense to be able to know that there's going to be moments in trading that it's going to be frustrating, but also to know that if I can hold steady through those and let the annoying days stay contained, I do have more successful positive days than not. And so then that allows it to grow over time, because you don't have outsized losses. I think that is the game that we're in trading, is that there just isn't a statistically successful enough strategy to win every single day. That's just not really the reality. And so recognizing that sometimes we have to just take the hit and wait for better conditions that we see more clearly and have the risk tolerance to take. That's the part of the game that we are in. One point about being a trader is that, you guys, our P&L is not necessarily a reflection of our trading skill, but more so a reflection of our emotional stability, right? Okay, so like if you have a really good trading skill and you have good setups that you can see and that you can capitalize on, why are not you green all the time? Because your risk would be contained because of the risk management strategy, and you would have opportunities every day. It gets tricky because we let our emotions have too much play oftentimes. I certainly have been guilty of this, of getting in too soon and getting stopped out, of chasing a trade that wasn't part of my best setup. So our P&L really is more of a reflection of our emotional stability and psychological stability than necessarily our trading skill. And so that's something that I want to keep in the back of our minds, and especially as part of the heart of this conversation, is that if we can really lock into dealing with ourselves on the way that we approach our trading, I think that we can be way stronger with it. Previously, I have done a must-read review on Angela Duckworth's book, Grit. She's amazing. And she has some really great points in that book about being dedicated and having perseverance. And that doesn't necessarily mean that you have intensity with it or an outsized passion, or you're willing to just throw caution to the wind. More so that it is focused and that you have passion and perseverance and dedication, and you respect that it's a long game process. You don't have to push super hard at something because you want to build that strong foundation and show up day after day, even when it's not cute or pretty and it sucks. Like maybe you're in a downturn and your P&L is out and you lost your accounts. It doesn't have to be like the worst part of your trading career. If we can reframe that as like, this period is not great. I don't feel comfortable. I wish I was making money, but what is happening? What is my situation? What can I learn right now? Who can I ask questions of? Because clearly I'm not winning. Then what do I need to do? What can I journal and figure out? Am I not understanding the market? Am I mismanaging my entries? Do I need to adjust my entry criteria? Do I need to adjust my profit taking criteria based on the conditions that we're having? And so if we can reframe it in the framework of just being grit and perseverance with our trading energy, a drawdown period doesn't necessarily have to be the worst thing ever. It can be an unpleasant moment, but it can be powerful in terms of the long game. In terms of this period, probably you needed to learn something. And whether it's technical or psychological, I think we'll encounter both as traders. But to say that, a sucky period in your trading is all bad, that's not the attitude for long-term perseverance and in business model, right? I mean, even plenty of businesses will have periods where they're not thriving and something is wrong. Maybe they need to change products or deal with different marketing or what have you. That's a period where you can figure out what's off, fine tune it, and then hopefully increase your trajectory into even better outcomes, right? So I think that I love that whole opportunity we have within trading. But then I do think that trading is kind of, deceptive because the feedback loop is so fast. We really do get those dopamine hits rapid fire. There's immediate reinforcement on you're right or you're wrong. I execute on the 3 to 5 minute charts, and I prioritize the 15 and 30 minute when I am trading intraday in the morning on New York session. So I get immediate feedback if I am right or wrong, if my trade plan that I set up ahead of market open, if it worked, if it didn't, if I got in right, if I managed it well, if I have that green P&L. So that can feel so fast. It's so logical how we can get wrapped up in the emotions of it, in the dopamine hits, in the highs and lows. They come at you so fast that for new traders to think that they can just automatically nail that psychology, I'm sorry, but that's not realistic unless you come from like a very strong psychological background and you've had like advanced training in keeping your emotions settled and like mitigating that fight or flight response. That's going to be a huge experience to have to figure out how to navigate as an early trader because of that immediate feedback that you get from being a day trader, especially. But I think if we can tamp that down, the effects can really compound because you learn so much. We're not paid by the highs and lows, right? But that excitement, we have to figure out how to settle it in, aim for more neutrality, aim for this is a business. And so I'm going to execute, like set up my best business plan and trade plan for each session that you intend to trade, each trade opportunity, execute it to the best of your ability. And then hopefully by having that discipline and having a strong trading edge, the repetition is what gets you paid. That disciplined repetition where you are studying and fine tuning so you have a strong trading strategy and then executing it per strategy and honoring the red side of that is the biggest thing. That way the green side of that can compound, because I think, ideally we're taking 2-to-1s most of the time. And if you have a strategy that's more than 50% profitable, you'll make money over time. The kicker comes in when we can't accept those little red days. And so I think that is where you want to really respect the fact that like disciplined consistency and having repetition with honoring our system is so powerful, even though it's not like super flashy. And I think that if you can do this, recognize this need, fine tune, show up for the work after day, 3 to 5 years of that in your face all the time, experiencing what it happens when you don't honor your system and when you have the emotional days where you revenge trade, you overtrade, you over leverage, and you regret it. If you can push through that and take the lessons from that, you will see the steady improvement, and that will get you to the outcomes for the long term, for decades of profitability as traders, versus someone who sprints and acts crazy and throws all of their leverage at every single trade. And sometimes they can get an account through to a payout, and sometimes it blows before it gets to payout. Those traders can make money because they can have a trading edge where they see really good trades and they have the guts, or whatever you want to label it as, to put on this crazy risk before you're super locked in. That will get certain results. But statistically, scientifically, logically, the trader who makes it for decades and compounds their wealth and experience over time are the ones that back it off a little bit and aim for that like dedicated study periods where you really fine tune your system and you execute with more consistency, reasonable leverage, that you can have the small hits and stay steady and trade day after day and not throw a ton of money at reset fees. That's a much stronger strategy for the long-term goal, but it is not as big and flashy. It's more boring and at times kind of sucky, but the results are there. If you look into consistently profitable traders, if you dig into their stories, which I am so blessed to be able to do with trader interviews that I conduct on this podcast, a lot of them, if not all of them, will have that period where they realize they really need to stop messing around with the bullshit of revenge trading and over leveraging, and instead really dial their system in and let it be more boring, even though day trading is sometimes viewed as a super flashy pursuit. That's when you can really start to let it grow. And so I think this is something that we all need to consider. Are we trying to run a sprint and beat the other person that you maybe know about and who is trading and who had these great days? Are we trying to sprint and beat them today? Or are we kind of locked into building a career, building a business, and tuning out the noise, being happy for people that we know that are winning as trading, but then honoring ourselves and where we're at and where we're going? That way we can respect the journey from inside the journey, so we can feel more steady and stable through all of this experience. Because I think that who we are growing into is should be the goal, right? It should be where we're headed with who we're becoming as traders. Now, on that subject, I have to give some credence to James Clear and his book, Atomic Habits, because it's one of my favorites. Also a must-read book recommendation episode for Market Mamas, because, obviously it had to be a killer. But one of his quotes that I love is, every action you take is a vote for the type of person you want to become. So every action we take as traders is shaping who we are. It's a vote for the type of trader we are becoming. It is creating habits within us that we're going to do quicker because it's a habit. It's something that we have done. You get up and you feed your dog the same way every single morning, like that. It's second nature. You don't have to think about it anymore. And that's what happens with trading too. And so I think it's so important to think about in your first couple of years, what habits are you ingraining in your psyche that are going to come more rapidly off your fingertips onto your mouse and into your trading system? Because those outcomes really are creating your trading situation, creating you as a trader, who you are and what you do. And so if we can reframe that to, instead of, I need to make 500 a day because the math says that if I make 500 a day, then I can make $1 million based on accounts and all the things. But if you can flip that a little bit and just think, I need to trade my system and build my excellent habits around a trading strategy that I understand, the money follows. It comes secondary, and your priority is honoring yourself as a trader and your risk management and your system. And that's not, looking at, I don't know if you've done this, but I certainly have, where I've written out, if I can make $500 a day, this many accounts, this many trading days a year, this will be the outcome. So this is what I'm doing. 100% I have that document. And I really was very excited when I did it. But the heart of who I want to be shouldn't be necessarily, I need to get to this P&L, because if I get 350 and I'm struggling, then I'm going to put on another trade and that maybe like mess around and take a subpar trade and then go from 350 green to 1,000 red in the matter of an hour and a lot of bullshit. Then that was not ideal. And the target should not have been $500. Maybe it should be that this morning I could only get this much out of the market because it was messing around. It was chopping. It was kind of sideways. I thought it would go to these deeper targets, which would have got me 500-600. It didn't. And it came out on my runner contract. That's maybe how I got to that P&L. So that day isn't performing perfectly to your system, and you've got a good payout. You've got or a good P&L on that first trade. Maybe you call it a day. And so there's some trader maturity with focusing on only shooting your shots at the best setups per your system, per your psychology, per your trading time that you have the ability to focus on, and letting all kind of variance come into that, because the priority is strong habits and trading executions versus money. And I think that that helps us appreciate all that we know and how we can let it follow. And I think on the backs of that, not necessarily making a day being successful, whether or not your P&L ended green or red, but rather your day is successful if you followed your rules, if you honored your intentions and your trade system, and you were respectful of your risk management for a given day or week or period. Because I think framing that as success, super powerful in terms of fostering the trader that you want to become. I think there's a mind frame shift that we can do with this. And instead of, I think I see a trade and I hope that this works out, instead, I'm going to execute on my strategy and the outcomes are going to be variable, but I think that this is a good trade and it's worth my risk. It's like different. You think about, instead of, gosh, I really hope if I just throw some longs at this when the market feels bullish, it's going to work. No, it's more pragmatic, systematic, business oriented. Those are different approaches to trade management, and it creates that strength. And I think that professional long-term traders focus on their identity as a trader, that they are consistent, steady, they have frustration tolerance, they want to respect the variance of the market and always honor their downside risk because they want their accounts to grow over time. But more amateur traders are more focused on the outcome and not getting that $500 a day. Otherwise, they feel like they failed. And it's not as easy as it sounds. Like, this is a big shift in identity that has to happen when you're an early trader. It's not intuitive for nearly anyone. And so respecting the fact that this is something you have to kind of grow into and learn over time is really kind of a valuable approach to everything. And I think it's not necessarily always about grinding harder, pushing harder at the market, fighting with it to get that P&L that you want, but it's more about deciding who you want to be as a trader, and that some days aren't ideal. Some days you're not going to win, respecting your variance and saying, I am a steady trader. I'm not hunting trades, and I'm not competing with every Joe on the internet about what reel they're posting from their morning trade. Let's lock into our own journey, our own professionalism. And even on the sucky days, it doesn't have to mean any kind of thing about who you are. It's just a part of the way that we're growing, right? I think being a disciplined risk manager is so much stronger than being like an opportunistic with momentum energy always. But I think long term will make the better outcome instead of chasing momentum and emotional triggers versus locking in. I think everything that we do on the charts, like James Clear said, it's a vote for who you become. And so trying every day our very best to remember that and to only execute on the best setups per our system with the leverage that we've agreed to when we're not trading. Those are votes for who you're going to become. And that will help you persist through the challenging time when the emotions are tugging at you to mess around, choosing purposefully each time of, I want to trade because I'm frustrated and I didn't get the points that I want today, to I'm a little bit red and I'm frustrated. So this is not my ideal situation to execute and put my accounts on the line. So I really need to step back. That reframe is really, really worth it if we can get there. So there's another author I want to mention. It is Seth Godin, and he talks about the dip. And I think that this is such an interesting concept for us traders, right? Because we understand dips. You want to buy the dip, right? Buy the pullback. So for him, and the way he outlines it, it's basically the space after the excitement fades, the motivation, the thrill, the early dreams of millionaire status. When that fades, but the mastery hasn't fully developed yet, there's a dip. There's a dip in your whole career in trading. And during that dip is when a lot of traders quit. The early excitement is thrilling, right? There's so much energy and momentum and excitement, and you're planning trips and your home upgrade and whatever your eyes dream of when you sleep. But you're not masterful enough yet. You don't have a strong trading strategy and system and playbook and stability with it all. And so what does that look like? What does that dip look like? Because in trading, it's understanding your setups. You're learning from mentor. You're starting to figure it out, but maybe you're hesitating. Maybe you're getting missed entries. You're getting in too late or too early. You're getting stop outs before it really takes off. You're seeing a certain setup and thinking it's one thing. It's not quite. You take it anyway. You mismanage it. You're learning. You're messing up. You're breaking your rules. You're figuring out how much it hurts to break your rules. Then you start to figure out how to take better trades, but you're break even because you have wins, you have losses. There's some neutrality in there. Break even, honestly, is actually quite a win for traders. When you can go from losing more to hitting break even, that means you're starting to pull through that dip. You wish you were further along. You wish, like, I learned these strategies from this mentor, and if he's profitable, then why am I not profitable? Because I learned the system, I go to the classes, I watched his videos. I should have the money that you have when you trade the system. That's frustrating. And you want to be farther along than you are the entire time through the dip, I think. But you can't force the experience that you need to get during this time. I know that for me during this period, I want to question everything. Is the strategy really the one? Should I be learning from this mentor? Should I find another mentor? Do I need to grow in different ways to excel my situation? Am I learning enough? Is it me? Is it the market? Is it my friend is doing way better and that pisses me off? Like, you question, you wonder, you think, you stay up at night, you over leverage because you're in a drawdown. You just want to fix it faster. That period is what is teaching you. It's the lessons. It's where you don't know enough to really lock in and stop doing these behaviors that are hurting you. And so that's why most traders quit, because there's not enough frustration tolerance to persevere during this time. And I get it. Like, the suck actually sucks. And there are periods where there's tears and maybe a little bit of alcohol, whatever here, but there is time when this is really hard. And I get it. And if you're there during this time, like, you're at the right place. Market Mamas, we talk a lot about psychology and how we can push through that, because pushing through that period is how you get to the other side. And I am pushing into my most profitable ever, but I mean, naturally, but it does turn with perseverance, I guess is what I'm trying to say. And with thinking about how we can lock in more so during the periods where it's not glamorous and beautiful, but to respect the fact that those are the required educational periods in our trading career, and holding steady gets us to a new place. It's not necessarily that you can't trade during this period, but it's that you don't know what you don't know, and you're still learning and dialing it in and shifting your habits from the not helpful habits to the helpful habits. And the more you shift them and the more you get the improved outcomes, it reinforces that behavior. And that takes a long time to really change that trajectory. But this period is uncomfortable. So that's what you have to weather, is the uncomfortable phase where you're in that dip. The motivation has waned. You're worried if you're going to get there, and the mastery has not come, both technically and psychologically. That period can last for months to years, depending on who you are, where you came from, what point in life you're at, who you're learning from, what your dip experience looks like. Different people will have different issues with different challenging points in their trading, revenge, over leveraging, hesitation. Those will look slightly different, but it will take longer than we wish it could, right? And so this is where embracing the suck is a strategic choice to persevere through, to have the faith in where you're going and getting through to that, because the market really is not going to reward intensity and pushing at it harder and fighting all day for points, but more so it rewards endurance, patience, adjusting your frustration tolerance, adjusting your habits, and then realizing that the new ones are better, and having the endurance to fight, to behave as good as you can each day and let it turn. Surviving the dip without blowing all of the monies and your psychology, that will get you ahead of easily 80% of traders. Just that endurance alone, just saying, this sucks and I am not where I want to be yet, but I'm not giving up, and I'm going to manage my risks so that I don't hurt anyone financially. I mean, you have to be able to afford to continue through this, right? There's an argument there of you need to be able to keep your leverage down enough. You're not blowing real money. And if you are paying reset fees through proprietary funding companies, that you are doing it in a way that is sustainable. You're still able to afford your life. If you can approach trading, which there's many ways to learn trading without blowing all of the dollars, such as sim trading, micro trading, trading with proprietary funds until you're really good. If you're using those strategies to be able to endure potentially years of learning, then that is a setup for success because you are putting yourself in front of the charts and trying nearly every day that the market is open and allowing that experience to compound and allowing yourself to have the time to pivot those habits that are voting for who you're becoming. And you can weather that dip should you choose to weather it. And then there is another side of it that we have seen. If you're in the world trading, you have seen the big, beautiful, profitable traders that are on the podcast and on the shows and have their own channels and own systems and all of that jazz. They exist, and they exist because it's doable. But it's not always easy, and it's not always as fast as we would hope or as others sometimes make it look to be. Okay, so what about, let's make this kind of practical. What does embracing the suck look like? I think it means loving the boredom, choosing to embrace the boredom, to see that I'm comfortable doing nothing and that not every day is going to be a home run. And some days I'm going to make $200 and it'll be annoying and I'll have to go about my day and it takes longer for my accounts to compound. But I know that boredom is helping me stay stable. So you got to kind of lock into boring trading being a part of the growth. And then I think a big one for me, especially, and I think for a lot of traders, basin traders that I know, is allowing small losses. Respecting small losses, respecting that that's the variance of a trading system and that you have to be able to take the hits, because people who allow the big losses, that's an ego situation. Like you have to be right. You have to fight with it. You have to take on whatever risk you need in order to end the day green. Then you end up with a big fat loss. There's a little bit too much ego in that situation. You got to try and tamp that down, be a professional, let it be a small loss, move on, don't make it worse. But that's hard. That's a hard thing for a lot of people, myself included, is allowing small losses to just happen and not change your trajectory in any kind of big way. And then I think also during this period, you have to review your pain points, review the hurt, review the frustration, review the sucky days. When you lost, when you couldn't see the market, when you put a trade on and you maybe didn't fully understand it, like dig into that with your journaling, figure out what you could have done different and better, and try your best to find the lessons and make it matter so that you don't bury your hurt, but you dissect that mistake and make it matter to be better in the long term. That is really a powerful stance when you're during this period. Also, I think staying small in terms of leverage longer than you want is actually really helpful, because when you start to leverage up, it brings on different emotions and psychology into play where you can be really uncomfortable with the numbers that start printing if you're leveraging up faster than you really ought to. And so I think there's really an argument for, you want to trade bigger size, you want to get the bigger outcomes, but do it slowly, like add maybe 20% of account size once you've had a stable period of a couple of months. That way you're not going from one P&L number to 3x that, and you're all kinds of mismanaging your trade because you're not used to the numbers that are being thrown around. And so if your size feels too small, let it stay small for a while so you can really build that skill and confidence. Because once you have real confidence in a system, you will execute better and you can tolerate the size changes because you know you're in a really good trade or what have you. You know how to manage the risk and calculate what it looks like on the downside if you've traded that for some time with smaller size. But if you're oversized, you can traumatize yourself. Oversized trading and big losses can cause trading trauma, and that sucks. Those days are going to be harder to get past. They just are, because they hurt deeper, they cut deeper, they set you back farther. A small losing day or a $500 losing day is going to feel very different than blowing a batch of 6 accounts that you had trade copied. Like, those are very different days, and the emotional impact and the setback you could experience are different too. So I would definitely be an advocate for staying small as long as you can during this period to really cement a strong foundation so that you're not traumatizing yourself and setting yourself back in bigger ways that just delays the success, really, that trauma. Now, I think focusing on process over P&L is a big one. Process over payouts, profits over the pretty green days, because when you lock into your process, that is what makes you a professional. It's what makes trading a business versus a hobby and a get-rich-quick scheme, Instead, it says, I'm only putting my capital on the line when I see these things, because you need to be able to judge yourself on, did I follow my rules? Did I respect my risk? Did I manage my emotions? Not, did I get the best trade of the day and I ended green and I'm really excited to say it to the world? Not, it's fine that I was kind of sloppy today and over leveraged because it ended green. What ends well, was well, whatever the saying is. It's not ideal to feed the habits of poor trading behaviors and then just wash it under the rug because you ended green. Instead, it's better for long-term sustaining if we can choose the process over the P&L, I guess is my point. Because some days you have a red day and it was a great setup and the variance went against you. And that day does not have to be a negative in your journal. It can be, this day didn't end well, but I'm successful in my process because I allowed the small loss to sit and I walked away and I didn't make it worse. So a red day that you honored your system really is a part of a sustainable business model versus a sloppy green day that you really messed around with and were lucky to get out of. You know what I mean? So if I told you that you could be profitable in 5 years, but the first 2 or 3 are going to be painful, expensive, frustrating, tear-filled, would you do it? I would. I am. And I don't know that I knew that before, but it's something to think about because we want to sort of like compress time. We want to have the beautiful results that we see on traders on Instagram in 12 months because that sounds amazing and some people have done it, but that's not actually the reality. And there's so much out there in social media, especially that makes it feel appealing and approachable and manageable and achievable for everyone. But I think that there's not enough out there that it says that the reality is that it really, you need to have that time to let it grow. You're not trying to build a hot streak and just get that Ferrari to buy whatever day, but instead you're trying to build a business, a career, be a professional trader that allows it to compound and diversify over time. Those are different approaches and different goals. And so allowing yourself to believe in the long game, knowing that what you're doing now is building that part of you that you have to have strong in order to get those results. And so as taking this as a business, you want to focus on things like understanding your metrics, doing your journaling, figuring out what part of your trading setup is working great and what part maybe you need to fine tune and work on. You want to protect your capital on days when you're not seeing clearly. That way you don't have massive setbacks you have to dig out of holes with. You want to spend the time optimizing your process. So figuring out what you could do better and fine tune in order to execute even better next week. And you got to survive the downturns, the drawbacks. You need to be able to be in a drawdown and recognize I'm learning, something's off. I'm going to take a little break. I'm going to journal the heck out of this. And I'm just going to aim at one good trade followed by one good trade. Thank you, Mike Bellafiore. And so if we can do that, then you get out of the drawdowns faster. So it's a reframe, right? You want to treat it like a business and not a lottery ticket that you're just hoping to be able to throw the right amount of contracts at the right big move and just kill it for the year. That shouldn't be the goal, in my opinion, anyway. Now, I think if we can choose to lock into this process, allowing it to be a long game mentality and recognize that there will be a period of suck that you're just going to have to accept and embrace and appreciate and learn from. What does that look like? So it says in your trading plan, write it out in your playbook, literally. I think this is great advice and I have it in mind that what is my max risk per day? How am I going to choose to honor that? Who am I going to tell to help hold me accountable for that? What is my edge, my best setups? What do they look like in excruciating detail? Like, what do they look like? What time of day do they present? What time frame is best for monitoring them on? What larger time frames do I need to have in sync to execute them on? Like, write all that out, study it, hunt it, back test it, ask about it, and delineate it. That way it's faster. You understand it better. Use this time for that. Recognize your daily loss limit as well as your max weekly loss limit. And if you hit those, what are you going to do? Like, what behavioral, environmental, daily choices are you going to do? Walk away, get outside, shut your computer down for the day. Have something in your system to manage that because it will happen. And then definitely journal honestly. Like, don't journal for fluff and to check a box that you journaled, but really think about what you did well, what you did differently, what you could do better, what you're happy you did, and what you want to fine tune over time. Because this time, like I said, can really be powerful for drilling into the areas for improvement. So you can strive for that 1% better over time. It's really a powerful approach. And then also think about how you're managing your emotions. Because if you find that you're still giving into frustration too often, what do you need to do about that? Who can you talk to about that? Who can you call in the moment when you're really frustrated in order to be kind of a circuit breaker on those activities? Think about if we're allowing too much emotion into the way we're executing, and then figure out how to stop that sooner next time. That way we don't get into too much trouble. And I say you, I say we. I am not a perfect trader, and these are things that I work on, that I like to think about. This whole conversation I really enjoy, because I recognize that there is still parts of my journey that suck. There are still days that I perform suboptimally, and I want to let them not be a huge deal for me, and to recognize how far I've come, and that clearly that just was something that I still need a lesson on. And I'm going to continue to get better over time. And so that's part of the beauty of this podcast, is that I get to talk about the things that make me better, and then maybe will help others as well. So that's where we're at today. I think if you're in a drawdown, if you're in the dip, if you are having some red days, I'm really glad that you hung through this podcast episode, because you are so not alone, and it's a very real situation. So, think about what you could do differently, how you can approach this differently, and embrace the suck, because if you want to do this thing long term, it's shaping you. It's turning us into who we're going to be 5-10 years down the line. This period is developing those habits. So let's really be intentional with the habits that we're choosing to feed, because I think it's powerful to choose boredom, choose discipline, choose journaling, choose small, repeatable choices in our trading that gets us even like moderate P&L that will grow over time. I think the whole goal is to survive long enough as day traders to get good, because getting good is not necessarily learning one technical edge from one guy who makes a lot of money, but instead it's learning technical edges, making them your own, studying the crap out of them, and then getting better at feeding the habits that allow you to execute successfully on them. That takes years. That takes a dip period where you are building your strong foundation so that you can come through as a professional who embraced the suck and gets rewarded for having created the habits and fostering the behaviors that got them the beautiful outcomes. Because trading doesn't reward the most aggressive. It rewards the most stable. The ones who have shown up for the work and fine-tuned over time and believed in themselves and stuck it out. Like that grit and consistency and perseverance is what it takes. And I think if you really want this, then let's do it, right? Let's keep embracing these conversations. Like, hang out with me at Market Mamas. I'm here with you. I'm growing as well as a trader. I have many, many, many more milestones that I want to achieve in my trading goals. And I have no doubt that I'm going to get them, because I believe in literally this entire episode of letting the hard days teach me and getting better over time. And I think that we all can do that. So how bad do you want it? Can we suck long enough to deserve the outcome on the other side? Can we embrace that period? I think we can. I think that you are doing it. And I am so grateful that you're here with me at Market Mamas, and you gave me your time today to have this conversation. So thank you for being here. Throw a comment in if you stuck it out and gained any valuable insight from this. And reach out to me if you have any thoughts or opinions. My website is www.market-mamas.com. It houses all the episodes and some resources. And just thanks for being here with me. And, embrace the suck if you're there. And otherwise, congratulations on making it through. Take care, everyone. Bye.